Markets have gone down significantly during the past few months, and some experts believe that it is bound to get worse.
But I think investors heading into this and traders and economists around the world were looking for direction in terms of where are we in this inflation-fighting effort from the Fed.
American entrepreneur Jim Rogers recently discussed his pessimistic view on the economy and gave some crucial tips on investing. We've covered bear markets in many recent videos, all of which is related to what we will be covering today. Make sure you stick around to the end of the video to hear investing advice from one of the greatest to have ever invested in American markets. Before we get on with the video, we'd like to thank you guys for the support you've shown for our channel. Stay tuned as we will produce more finance content soon.
If you want to be a successful investor, stay with what you know. Don't listen to me, Trish. Stay away from hot tips. Never, ever follow a hot tip. And I will say that to many people. I say, ignore hot tips. And they will say, okay, we understand. Just give me one hot tip. Just one. Just one. Everybody wants to be rich this week. I do too. But please, my first advice is stay far away from hot tips, no matter from where they come. But if you want to be successful, Trish, just stay with what you know. Everybody watching this or reading this knows a lot about something, whether it's cars or fashion or sports or something. So that's where you start, because you already know more than most people. You certainly know more than I do about most things, because that's what you love. When you go to a doctor's office, those are the magazines you read. Or when you go online, those are the websites you visit. So you already know a lot more about something than I do, and you know more about whatever it is than most people in the world. So stay there, and when you see something happening in the field that you love and know a lot about, something that you know is going to work, be successful, then do some research, find the companies. Are they smart people? Do they have too much debt? There are many things you can look up about that company. But then, since you know more about it than most of us, if you decide it's going to be successful, then you make an investment. That's how you become successful and rich. And people will say, but that's boring. Okay, Trish, you want to be rich? You want to be successful? Be boring. Be boring and stay with what you know, and don't be following people like maybe you can follow Jordan, but don't follow me and most other people in the investment world, because you will go broke unless, if I told you something, Trish, now I'm going to give you the long version. If I told you something in which to invest and you did it and it went up, you wouldn't know what to do. You don't know why you bought it. If it went down, you wouldn't know what to do. You'd blame it on me. You say, that Jim Rogers doesn't know anything. He told me to buy X and it went down. But the point is, you wouldn't know what to do because you don't know why you bought it in the first place. So please stay with what you know, and you will be extremely successful, and you will be very, very rich someday if you want to be successful. And if you love investing, you obviously love something because that's your passion. Well, follow that. And that will lead you to successful investing.
In this clip, Jim Rogers advises those who want total financial freedom. He states that if you want to get rich, it's better to invest in an industry that you are familiar with and passionate about. He further adds that he is against taking advice from financial gurus, even himself, and reiterates his point about sticking with what you know. In this next point, Jim Rogers discusses the factors that may lead to the upcoming bear market.
There's so much pessimism around right now, that I'm usually, when there's this much pessimism, something happens to cause a big rally. And the rally is big because everybody's pessimistic. I mean, for instance, if we had peace in Ukraine, the market would go through the roof for a while. And I hope that's when I would start shorting in a much bigger way. My plan is that if we have a last rally, a blow-off rally, that I'll be smart enough to short it. this is not my first rodeo. You're right, Jordan. I've been here before. A difference in now in the 70s, you mentioned some similarities, but in the 1970s, the United States was still a creditor nation as a whole. Now we are the largest debtor nation in the history of the world. So there are more differences. And the debt is, I mean, look out the window, Jordan. The debt is staggering all over the world, not just in the U.S. What they're doing in Japan is mind-boggling. It's so absurd. But that's happening many places. So it's going to be bad. We're going to have bear markets, whether we like it or not. I know there are some people who say, you're just trying to scare us. No, I'm not. I'm telling you the facts of history. We've always had bear markets, and we always will have bear markets. And one should know that. If you don't know that, probably you should not be investing, and you should be prepared. That's all I'm suggesting. You can watch Jordan and get prepared for what's coming. And if you're prepared, you will probably do well, or you'll certainly survive, and you might even make a lot of money.
Right.
I don't like the fact that we're going to have a horrible bear market, but I have to be prepared or I'll get wiped out too. The market today is still down about 40%. I'd have to look up exactly from its all-time high. You were right. I mean, it's been a nightmare in Japan. The Japanese market made its high in 1990. That's not a typo, 1990.
Right.
That's 32 years ago. Now, there are not many markets in the world that you can say that about. My gosh, it's been down for 32 years. But that's the case in Japan. These things can happen and do happen. And when we have big bear markets, a lot of people get hurt. My point was that, yes, when you look at historic bear markets, let's say agriculture, agriculture didn't just go down for 4 years and then have a big bull market, or many things. Japan, for instance, the point is that the real bear market, you may have big rallies. An industry or a company may go down for 4 or 5 years and have a big rally, but then it usually has a retest, and it takes years to wipe out or clean out the excess capacity in most industries or the lack of demand. And then you can have a long, when I call a bull market, is something where you can just buy it and put it away and go to the beach, where you don't have to worry about it. That's what I meant by serious bear markets, and that they last a long time.
Right.
Not all of them, of course. I mean, Amazon didn't stay down for 10 or 15 years when it collapsed long ago, but many things usually do.
Jim Rogers explains how the current situation in the US economy is different from the 1970 economic climate wherein inflation reached extreme levels. He highlights the immense amount of debt the US has today and how it turned from a creditor nation to the largest debtor nation. Jim says bear markets are inevitable, and investors must prepare for them. He also briefly touched on the economic situation of Japan and how its economy has failed to return to its all-time high in 1990, over 30 years ago. The most important takeaway from this is to be prepared for the upcoming bear market. So how does this bear market compare to the previous ones like during and after World War II?
Between now and World War II also, yes, things were bad. Obviously, whenever you have something like World War II, and America built up a lot of debt. But America also had huge assets saved up because of the Depression and because of the war. We had huge savings in the system at household level, even government level. There were huge savings that people could then deploy, even though there was a lot of huge government debt. And there was a lot of excess capacity because of the war, because of the Depression and because of the war. People couldn't be using excess capacity to build cars or TV, radios, or whatever it was. So there are differences. That debt was huge, but it was offset by very large savings that had been built up during the Depression and during the Second World War. And so after the war, people could start spending their savings, and there was enough capacity, excess capacity in the system, that there wasn't a huge amount of inflation. So we had an ideal period. Nobody likes to think of the war, but after the war, it was somewhat ideal since we won the war. But even the countries that lost the war they too had.
When asked about the economy during World War II compared to the present economy, Jim Rogers stated that although the US had built up a considerable amount of debt in both periods, the US had plenty of reserve assets during World War II because it was fresh from a depression and, of course, the war. Consumers then spent all these savings after the war, so inflation was not too bad. Ironically, the war provided investment opportunities for all countries involved, even the ones who lost, according to Jim Rogers. In his next point, Jim Rogers returns to his advice for new investors.
Yes, people need to learn about investing. They need to learn about saving and investing. Everybody does. Well, Jordan, yes, you can say, all right, you buy an index fund so you can start to see what this is all about. My advice would be, no, wait until you've done a lot more homework, and then you decide that you want to start with an index fund. Don't listen to some guy unless you know what an index fund is and how they work and why that might be a wise decision. Don't do that. Just wait.
Right.
Jordan, there are going to be many, many investment opportunities. Anybody who's 25 or even 55, there are going to be many investment opportunities in their lifetime. Don't hurry. Be patient.
Right.
The best thing I will tell you is something that I've said before, is just wait until you see some money over there in the corner lying on the floor. All you got to do is go over there and pick it up.
Oh,
that's how you get rich. Just wait. Wait till you see something that you think anyway is going to be a sure thing. And when you see the sure thing, because you know what you're doing, then invest.
In this last clip, Jim Rogers makes two critical points regarding investing. Number one is to do your homework. Like in his first advice, he reiterates that you must study diligently and be knowledgeable about your investment. This way, you will know when the perfect time to invest is. Second, he says to be patient. According to Jim, there will be plenty of investment opportunities in each of our lifetime. The key is to be patient about when to enter the market. To sum it all up, he says study and be patient. Wait until you find the perfect opportunity to invest in a field that you are very knowledgeable about. To summarize it all, in this section of the podcast, Jim Rogers first gave crucial financial advice for those looking to invest in markets. The main point he was conveying is to stick with what you are familiar with. In this way, you are confident in making your investments. Second, he explains the main difference between the current state of the economy and its state back in the 70s, which is the amount of debt the US is taking on. Compared to before, the US is taking on a staggering amount of debt. Jim also advises investors to prepare themselves for the upcoming bear market. Third, he talks about the economy during and after World War II and why inflation wasn't that bad during that period. This is mainly due to a significant amount of reserve assets because people were not spending any money during the depression that preceded the war. Lastly, he gives final advice on investing. Jim Rogers says to study and wait patiently for the perfect time to enter your chosen market. What did you think of Jim Rogers' view on the future of the economy? Did you find his advice useful for your future investments? Give us your thoughts in the comments section down below. If you enjoyed this video, kindly like and subscribe, and we'll catch you on the next one.